Alright, so what up guys, Profit Gang, you already know what it is. Welcome to my YouTube channel. If you're new here, I'm just one of those guys on the internet who has been putting out videos, but I've put out a lot of videos whereby I've given a lot of beginner stuff. I need to show you guys how to apply some of the things that I've put out there. You can go through some of the previous videos that I've done in the past, especially in the GPS free course videos. These are beginner friendly videos that if you're new to Forex trading in general, these videos are going to help you build a very solid foundation. But in this particular video, I'm going to be breaking down a trade idea I caught on EURUSD. Now, this trade was shared with my community before the trade played out. So I'm going to be breaking down the trade, showing you my thought process while I was scouting out this trade and showing you exactly how the trade ended up playing out, delivering a beautiful 1:5 risk to reward. Very amazing trade, and it's something that is repeatable over and over again. One of the qualities of a good strategy is the fact that you are able to repeat it over and over again in the market. This strategy is one that you are definitely going to be able to repeat over and over again in the market, and it shows up ever so often, week in, week out. It's all rinse and repeat. So without any further ado, I want us to jump into the market right now, and I'm going to be showing you guys exactly how I was able to catch this amazing trade on EURUSD, man. Let's get into the market. All right, what up guys? So once again, welcome to GPS trading. If you are absolutely new here, I want to welcome you guys to my trading community. I want to welcome you guys to my free signals channel. Now, if you want to join this free signal channel, this is a channel where I send in all of my trades, or trades that I consider very, very high probability setups. I like to share them here just for people to see that all of the efforts that we're putting into educating people, these are things that we actually use to trade the financial market. And of course, they work and they are repeatable over and over again, week in, week out in the financial market. So again, if you want to join this community and get to see how I trade live and copy my trades, or basically copy my signals, all you have to do is get on your Telegram and search for GPS free signal. So currently we have 370 members in the channel right now, but if you join, we're going to have 371, 372, 373, and so on and so forth. And hopefully we get to 1K subscribers. I'm going to celebrate that massively. It's going to mean a lot to me that 1,000 people can take out the time off their busy day just to see my analysis. Like, who do I even think I am? If you want to join this free signal channel, this is the channel that you need to be on to see how trading works over and over again. Now, there is no strategy in the world that's 100% loss proof. We also take losses, but again, with the idea of risk to reward and risk management, we tend to win a lot more than we lose. So I'm going to be putting in a lot of details in this particular video. So I want you guys to watch this video breakdown, and I want you guys to take a lot of lessons from this video. I'm going to be looking at external market structure. I'm going to be looking at the relationship between external and internal market structure. I'm going to be talking about change of character. I'm going to be talking about reversals, because a lot of you guys just believe that because the market has changed character, the market has actually reversed. All right. So I'm going to be reiterating the simple ideas of market structure, putting all of this in one video and showing you exactly how I was able to get this trade. Perfect application of the things that I'm going to be talking about in this video. Without further ado, let's jump into the market and let me start to break down this video. Again, this is where the signal was dropped. I dropped a lot of my signals here. We can see this is EURUSD. I dropped another on GBP USD. Guys, look at this daily level on GBP USD. Pay attention to these levels that I mark here. These are points of interest I was looking at on GBP USD. And in fact, look at what I said at the bottom here. I said GBP on the 4-hour time frame, you can see the 4-hour supply aligning with the daily supply. So right here, you can see the 4-hour supply aligning with this particular daily supply that I talked about earlier. Now, I said I would typically want to trade the higher supply, which is this supply right here, because I was viewing this level as a level of liquidity. But I said, remember, it's NFP week, so trade confirmations, whatever. So we were expecting the NFP to come out last week, but the NFP didn't come out last week because the US shut down their government. So the NFP report didn't really come out last week. But however, the market still got to this level here and sold beautifully from that level. I think I'm going to be touching on GBP USD shortly as well in the video if we have the time. Let's get into the market. Let me start to break down this trade. I'm going to give you guys the storyline. Now, one thing that's very, very huge for me is storyline. Now for the storyline, I'm going to start all the way on the weekly time frame on Euro USD. Now, if you pay attention to the weekly time frame, I know that we were heavily bullish coming into these levels, but the market follows higher time frame trends, and if there are higher time frame levels that were left unmitigated in the market, when the market gets to these levels, the market tends to react from these levels. So on the weekly time frame, we can see that when we look from this perspective, all of this is a bearish market. All of this is a bearish market. Now mind you, everybody was looking from this perspective and everybody was seeing a bullish market, but I was looking from this perspective on the weekly time frame, knowing the fact that the market will now get to some levels of resistance and or supply where there could be a reaction, and that reaction can cause us as day traders to have good trades from the market immediately. Now from the weekly time frame, we can all agree that we had a break of structure right here on the weekly time frame. Okay, this is the lower high that caused this as a lower low in the market. So that was the perspective I was looking from. Now based off of that, we're going to have some order blocks coming from the top right there. So when we zoom in and we start to mark out the valid order blocks that we can find at the very top, something very, very interesting happens. So based off of that break of structure on the weekly time frame, we can see the internal structure now on the weekly time frame. So what we can see here is we have this high, okay, we have this low. So what's going on here is kind of like an internal break of structure. We had a pushback to the upside, we had a break of structure. Obviously you can see that this never came back to this order block to mitigate that order block. All right, so we had two order blocks on the weekly time frame. We had this, I'm going to call this the daily order block just because I don't have a template for the weekly order. Oh, okay, I do weekly POI. Very, very good. You see, this is the reason why creating templates are very, very important, because you can work faster and more effectively by creating templates. So that's my template for the weekly POIs. Okay, the weekly POIs, it could be demand, it could be supply. Typically they're the same color, whether it's demand or supply, they're the same color. I just want to know where my points of interest are on the weekly time frame. Now on the weekly time frame here, the market definitely got into these areas of supply, okay, right here as we can see. But of course we cannot be trading from the weekly time frame. We need to refine the weekly zone to the daily zone, refine the daily zone to the 4-hour zone, refine the 4-hour zone to the 1-hour zone, where we're eventually going to be taking our trades from. Now here obviously we can see that the market pierced into the weekly time frame twice. Okay, so keeping these weekly zones in mind, let's go to the daily time frame now and see if the market came into daily zones that were within that weekly zones. Obviously we need to go back in time once again and take a look at the daily zones that were unmitigated. Obviously we had this, okay, this box here as our weekly order block. Now looking at the daily time frame, we can see that there was a clear break of structure on the daily time frame. Guys, I really want you to follow me here. This is top down analysis at its finest. All right, so we have a break of structure there on the daily time frame. Notice how after the break of structure, the market utilized kind of like a break and retest level, and then it continued to push down to the downside. Now obviously this internal break and retest level was aligned with this level here. Okay, I call this an internal order block. Okay, when you look at this, and of course if you would have placed your Fibonacci at the time from this all the way down to this, you'd have gotten a very beautiful trade from this level all the way to the downside. But remember, the market mitigated this particular level of supply, but it did not come up to mitigate the extreme level of supply, meaning that this level of supply was definitely still valid and unmitigated. Of course, we have multiple levels of supply here. This is another level of supply. All right, so all of these at the time of the market breaking this to the downside, I mean this break of structure here, we had this level as a possibility, we had this level as a possibility, and we had this level as a possibility. Now what I mean is the fact that the market could have easily, after this push that took out structure to the downside, the market could have easily pulled back all the way here and then sold to the downside, but the market didn't do that. So this level here was still very much valid, as well as this level here was also very much valid. I know you're enjoying the video. Pause the video, like this video right now, click the subscribe button. A lot of these videos are going to be coming your way. Let's get back to the video. Okay, so the fact that the market never gave us a trade from those levels doesn't mean that those levels have been invalidated. No, those levels are still very, very much valid levels. Now, to cut the long story short, all right, to cut the long story short, because we don't have a lot of time, I don't want to make this video too long, irrespective of the fact that I want to put a lot of gems in the video. Now, the long story short is the fact that the market invalidated this recently when it came back. Okay. Now, remember, the market was heavily bullish approaching those levels. Now, just for the reason that these levels are still valid levels, That's why we're going to expect the market to react off of these levels. Now, do we know if the market is going to react off of these levels and now reverse the trend entirely? No, we have zero idea the market was going to do that. But we know that there should be a reaction, or it's possible that there could be a reaction from these levels that could cause the market to reverse. So when we are looking at these levels and we are seeing the market giving us some signs of rejection and reversal from these levels, we definitely want to take these levels seriously, because these are very, very old levels. So very old levels tend to be very, very strong levels for reaction. All right, now looking at what the market did, obviously the market ran all the way down, right? After that break of structure there, the market ran all the way down, okay, ran all the way back up, ran all the way back down. And this leg of price, which is the most recent leg, right? This leg of price is an uptrend leading into a resistance level. Okay, when an uptrend is leading into a resistance level, we can expect that the resistance level will, of course, resist the market from going higher. It can hit the resistance level and now reverse. There's a possibility of a reversal from a resistance level. All right, so zooming into that right there. Again, remember that the bigger box here is from the weekly time frame, and then the more refined one here is from the daily time frame. So notice how the market first of all reacted off of the weekly zone. Massive rejection of that candle. Of course, day traders would have eaten enough from this rejection off of the weekly zone. You see the market going in there again, massive rejection. But at the end of the day, we are still quite bullish. Okay, we are still quite bullish coming into the level. Remember, there's an expectation that the market can get to this level before the drop. Now, looking at this leg of price here, which will now be the new most recent leg, when we zoom in, we can see that that leg of price is still bullish as the market approaches these levels here. Okay, so now starting our analysis from here, we can see how the market is bullish going from up, down. We can see the market creating new highs. Of course, here the market ranged for a bit, pushed up, broke out of the range, continuing its reign, and we have this massive push to the upside. Now we are on the daily time frame. The market has pierced into the weekly point of interest once again. Now the market is reacting from the daily point of interest that's within the weekly point of interest. It is a refined level on the weekly time frame to say, if the market can break through this level, then it's very certain that we are still going to be bullish. But if this level can hold price, not just hold price, give us a rejection off of the level, something that can cause a change of character on the lower time frame, then it's possible that we might have a reversal from these levels. Guys, this idea is a very simple idea. Okay, so right now I'm going to start to make my charts look a little bit more beautiful, so you guys can understand exactly what actually happened in this market right now. So on the daily time frame, I'm not going to start marking up everywhere. I'm just going to mark the most recent legs of price. All right, now when I saw the trade idea, mind you, this structure here was already broken, so I already saw a sweep of this low, which to me was a change of character. Now, looking at the daily time frame, guys, I'm going to mark out the daily structure starting from this low, leading up to the supply level that caused a bearish reaction and eventually a reversal. All right, so we can see the daily structure here. At this particular point in time, the market ranged for a bit, like I explained. So we can see the market failing to go higher. We can see the market failing to come lower. This is a typical example of a ranging market characterized by the sideways movement of price action. Okay, at this point, the market created this high. The market came back, created this low. The market is still ranging. The market created this high. The market created this low. Now the market broke out of this high, pulled back into the range, and from this low, the market sprinted into our daily level within the weekly level and created a new high. Now at this point, this was the last low that created the last high. Now again, at this point, this was the last low that created the last high in the market. Now, it's very, very essential to note that. It's very, very essential to note that. This was the last low that created the last high in the market. Now, what happened next was a massive bearish leg. The market ran all the way down from this, all the way down to this. Okay? The market came down all the way from here and gave this. Now, I obviously read this as a change of character, and I'll tell you why. So I'm going to name this DCHOCH, signifying that this is the daily change of character. Okay, this is the daily change of character. Now, the reason why this is a change of character is that this is a massive uptrend. And after a break of structure in an uptrend, obviously, you're expecting the market to react off of a demand level and go higher. So that was the break of structure there, and this would have been a very amazing demand level that we can look to be buying the market from. But at the end of the day, look at what happened here, guys. The market reacted off of the demand level. Okay, it reacted off of the demand level here, created this, and now we had a push to the downside that led to the market invalidating this demand level. So I could read this as a change of character. If the market was going to buy from here, obviously after this first interaction, it probably would have given like a double top or maybe a deeper push into this, and it would have gone higher, but all of that did not happen. So I read this as a change of character on the daily time frame. Now, if the daily time frame is changing character, then obviously a lot has happened on lower time frames. Now, mind you, like I said, this was the last low that created the last high, and when that low was taken out, that was a daily change of character. Now, another thing you would notice is the idea of internal and external market structure. Now, all of this is the leg that caused that change of character. So this is the first impulse leg to the downside. Now, notice how before the change of character, mind you, this is the entire leg. I'm going to interpret that as the external structure. But notice how before the change of character, we had this rundown, we had this, then we had this. Obviously, to me, that's looking like a very, very good internal structure. I don't know about you guys, but to me, that's looking like a very good internal structure. Now, it may not be very clear on the daily time frame, although this one is very clear. Sometimes you can see it a lot clearer on the 4-hour time frame. So what I'm going to do on the daily time frame here is I'm going to mark out the internal market structure coming from the daily time frame. So we have this high, we got this low, we got this high right here, and then we got this low right here. Okay, now I hope you guys understand how we broke down the market coming from this perspective, okay, all the way to this perspective. Okay, and what I did basically is I gave you guys a detailed storyline how I was able to spot this trade. This is exactly how I analyzed the trade and was able to come up with this particular trade opportunity. So I'm going to remove this. I don't want the charts to be too messy. Oh, that's important. That's important. That's very, very important, guys. Or what I'm going to do is I just want to draw the last leg so the charts will not be looking too messy, because sometimes I need to adjust these legs when I go to lower time frame. It's not going to pinpoint the exact same points. So now we can drop to the 4-hour time frame. Remember, before we get to the 4-hour time frame, remember this was the setup right here. Okay. This was the setup right here. So like I told you guys, I already saw that change of character, okay, right here. So I was expecting the market to pull back into that range so we could have, that sell. All right. So now we are on the 4-hour time frame. And like I said, exactly, sometimes, these points tend to be different on different time frames. So I'm going to adjust this just to make it look a little bit more sleek. So just give me a minute. Again, I'm doing this so you can see with my eyes. I want you guys to see exactly what I saw. So it's going to help you to understand the way I trade a lot better. So I'm going to pinpoint these at the correct points. Now, mind you, this particular one here is the external market structure. And of course, you can see the internal market structure here very, very beautifully, right? Very, very beautifully represented there. Of course, you can see this leg as well, okay, going up. We have on the internal market structure, we have this going on the 4-hour now. We have this as a low. I'm going to take this as the high. That's a low right there. This is a high. I'm going to take this as my, low. Run all the way up, that's a high. All the way down here, that's a low. Boom, that's a high. All right. This here is a low. Right there is a high. Guys, this is now 4-hour market structure, guys. 4-hour market structure. So this is a low. On a 4-hour time frame, this order block right here was mitigated at the time. We had this low, we had this high, then we had this low. Now this is the 4-hour time frame, guys. So I'm going to change the color to red, so you can now see the internal market structure coming from the 4-hour time frame. Now this will help you to understand liquidity a lot better, guys, a lot better, because liquidity is formed from unmitigated order blocks. So anytime an order block fails to be mitigated, liquidity is formed basically. So this is now the structure on the 4-hour time frame. Now mind you, our trade idea came from there right there. All right, so zooming in, we can see the different legs. Okay, so I'm going to hide the fact that the trade already has played out. So this is exactly what we're looking at, that made this trade even possible. All right, this is exactly what we're looking at that made this trade even possible. Now let's go back to the daily time frame a little bit. I'm going to hide this that I got from the 4-hour time frame. I don't want it visible on the. All right, so mind you, the trade idea is coming from this particular order block. This order block coming from the daily internal market structure. Now, the fact that it's internal market structure doesn't make it any less valid. The fact that it's internal market structure doesn't make it any less valid. It's still very, very much valid because it's coming from the higher time frame. Okay, higher time frame internal market structure order block is as strong as higher time frame external market structure order block. But the thing is, if I'm going to say what's a more higher probability trade based on the fact that it's going to give me higher risk to reward, it's going to be the external order block. But internal order blocks are still very much valid. At the end of the day, market structure is market structure, right? When we have something like this, and this, okay, when we have internal structure like this, and this, it's very possible for the market to come to this level of internal structure and give us a very amazing trade. However, a very more precise entry or a better entry will be when the retracement is deeper to the order block coming from the top here, and when it drops, just like this example here, we would have wanted to see this and this, but the market decided to give us this from the internal daily order block and this. And of course, you can see that the take profit has already been hit for that particular trade idea. I'm just here explaining the trade idea to you guys. So from the daily time frame, we have our daily order block. Okay, we have our daily order block. Now, what I'm going to do is I want to remove the weekly because I don't want it to look a little bit messy when we go down to the lower time frame. So I'm going to remove the weekly order block, but no, and keep in mind that we derived this daily order block from the weekly. So mentally, you should know that the weekly order block is there, but I just want to remove the weekly order block just so the charts are not going to look messy, right? So let's remove the weekly order block so we can see this particular order block a lot more clearer, right? Because we can now see that this is clearly a daily order block, right? Now, based on this particular change of character, if I'm going to go through drawing my order block with simply the law of order blocks, guys, the law of order blocks, right? On the daily time frame, this is going to be my order block. That's going to be my order block. Last bullish candle before the change of character. Now notice how this internal order block is aligned, is within the range of this. So it's very much possible for the market to just react from like the open area of this order block and drop, which is exactly what it did here, but we found a more precise entry using internal order block. Okay, instead of picking this as my order block, I can refine this and take the internal order block here as one order block. Then when I go to the 4-hour time frame, of course, because of this long wick here, I'm going to see another order block that I can now pick, to be, okay, inside that long wick there could be another order block, but not when I come to the 4-hour time frame and I'm seeing successful mitigations of market structure on the 4-hour. Now, to cut the long story short, remember this is our daily order block. So when we come to the 4-hour, we only want to be looking inside of this area here to find a 4-hour order block, inside of this area here to find a 4-hour order block. Now, how are we going to find the 4-hour order block? We're going to look at the 4-hour market structure to get our 4-hour order block. Now, what happened on the 4-hour market structure? This is exactly what happened. Again, we have structure within structure within structure going on here. We already got market structure on the 4-hour, which is the red line. But again, when we zoom into the market, we can see even more internal structure. I'm going to do this in blue just for the range of this high. Sorry. Just for the range of this high to this low. This is the level of internal market structure that we're now looking at right now. So just from there to there, I'm going to draw internal market structure again. This is structure within structure within structure now. So this is a low. This here is a high. And of course, we have this here as a low. Now, this is the third layer of market structure, guys. I don't want you guys to get confused. This is the third layer of market structure. I'm going to do this in blue, make it more visible. This is a way to color code your charts anyways. So you can see with this in mind, we now have a break of structure here, which now becomes a breaker because we are on the 4-hour. The 4-hour is still considered to be a higher time frame. So we have this as a break of structure here. This becomes a breaker level, and this level here becomes an order block. All right. This is the level that's responsible for this break of structure. Now, remember, all of this is coming from the daily time frame, right? This is still the daily order block. This is the 4-hour order block now within the daily order block. So essentially, we are refining the daily order block from this to this on the 4-hour now to this. So if you're going to enter, your entry is going to be here. Your stop loss is going to be here, as opposed to trading from the daily where your entry is going to be here. You can see how we just basically reduced the daily order block, or we refined the daily order block. All right. So that's where the trade idea comes from. Now, when it comes to market structure, this is what I'm going to explain before I come back to this. When it comes to market structure, there is the idea of possibilities and probabilities. Now, the market can react off of a breaker level. The market can react off of an order block. Now, let me show you guys the idea. What I mean is the market can, when it's bearish, when we have something like this, of course, we know we have an order block coming from this area here. So we're going to have an order block here. But of course, this is also a breaker level, or a break and retest level, as retail traders would like to call it. So there are two possibilities that exist in this market. Is either the market comes back to the breaker level and sells off, or the market can seek to get to the order block before it sells off. Now, these two possibilities are 100% valid. All right, guys, so I want to use this opportunity to tell you guys about ASSEX Markets. ASSEX Markets right now is one of the fast rising brokers. ASSEX Markets is going to give you 50% deposit bonus on all of your deposits. If you deposit $1,000, ASSEX Markets is going to give you an extra $500 that you can trade with. Low spreads, fast deposits, fast withdrawals straight to your Nigerian bank account. This month of October, ASSEX Markets is giving a brand new iPhone 17 Pro Max. Guys, want to trade with ASSEX Markets? Click on the link that you can find in the description of this video and start trading today with ASSEX Markets. Let's get back into the video, man. Okay, however, because this one here is going to give us more in terms of the profits, this one we can say is a higher probability setup. All right, this is a higher probability setup, whereas on the second one, right, we can have internal market structure that creates liquidity on this leg. This will now be liquidity. So this setup can tend to fail very easily. All right, if the market is seeking the order block. But at the same time, guys, we also have internal order block aligning with the external breaker. So it's also possible for the market to react from the breaker and just sell off. And this is exactly the trade that played out in this breakdown that I'm about to show you guys. So let's go back into the market and I'll show you guys exactly how I was able to call the market from the breaker level. Mind you, Let's go back into the chart. Look at exactly where I called the market from. Look at the order block right up there, but I called the market from the breaker level. Of course, you can see I put a Fibonacci in there. Also, the Fibonacci was suggesting that you should sell from that area. But of course, if my stop loss was just above the 79, it could be taken out because the market can seek to also manipulate the Fibonacci level. All right, I call this trade directly from the breaker. So let's go back into the market. Let's see the reasons why I call the trade from the breaker. So going back in, let's go to the 2-hour time frame now. Let's go to the 2-hour time frame. So looking at the 2-hour time frame, guys, come on, man. Look at how beautiful this trade looks. Look at how beautiful this trade looks. Again, I told you guys, this is a breaker level. That's a breaker level. And that's where I called the trade from. You can see how the trade played out right from there. Notice how I marked an order block right in here. Now, this is something I call multi-time frame analysis. Now, looking with your ordinary eyes, of course, you can see there's a fair value gap for fair value gap traders. There's a fair value gap just aligned with the breaker right there. But I trade with market structure whereby the market has to either react from the breaker or from the order blocks. Now, if I'm expecting the market to react from the breaker, sometimes I need more confirmation that this market is truly going to react from the breaker. So what I'm going to do is I'm going to scan the market on different time frames to see if there is an order block around that area there. Now, zooming in, you can see that all of these are bearish candles, so there's no order block on this time frame. But trust me, we're going to find the order block right now. Let's go to the 1-hour time frame. Let's see if that's where the order block was visible. Okay, 1-hour time frame, order block still not visible. Okay, 30 minutes time frame. Let's see if the order block is visible on 30 minutes time frame. We still have a bunch of bearish candles. Now notice how on the 30 minutes time frame I start to see some candles with long wicks. Now these candles with long wicks suggest to me that internally on these candles we're going to have highs, lows, highs, lows, highs, massive lows. Of course, you can see the market never came back to this order block to mitigate this. So even on the 30 minutes time frame, we already have an order block on the 30 minutes time frame. But let's go lower. I want to see a bullish candle before a break of structure. So let's go 15. So 15-minute time frame. Boom, right there. Right there, we see a bullish candle, then the market drops. And of course, we see a fair value gap once again. We see unmitigated order block. Just like I said, unmitigated order blocks are the cause of liquidity. Now, if I'm going to draw this liquidity all the way to, where the market took out that, let's see what that's going to be looking like. Okay, sometimes you need to really point these things out for people to see. So from this high on that week right there, we had liquidity. Okay, look at these guys. So now you can see the market sweeping liquidity right off of that. I'm going to add text into this as liquidity. Okay, now looking at this, you can see we had an order block there. Now what I did here was I borrowed an idea from retail traders. Of course, I knew that it's very possible for the market to come into this zone and at the end of the day not get to this order block. All right, it's very possible for the market to get here and not get to this order block. Guys, please don't get lost in this price action, man, because all of this structure within structure can get some people really, really confused and really, really lost. You have to watch this video multiple times to understand exactly what I'm doing here. This is deep knowledge. You're not going to find this anywhere, man. Trust me. All right. So I knew that it was possible for the market to get here and not get to the order block. So I picked the engulfing candle. All right. This candle engulfs this candle. This is my true order block, but I picked the engulfing candle instead because the engulfing candle is closer to the breaker. All right, it's closer to the breaker. Now you can see how many layers of structure we have in here. Okay, You can see how many layers of structure we have in here. This is the final layer, but I'm going to delete this. I was just trying to explain why I marked that out as an order block. Now, going back to the 2-hour time frame, okay, I want you guys to know where which order block was drawn. That's why I'm doing all of this. All right. So you can see this is the order block from the 15 minutes time frame. The market never really got to that order block. I picked the refined. Still, the market didn't get to the order block, but it got to the breaker. All right. Now you can see I definitely could have put my entry on the order block. That would have been a missed trade. That's the order block. That would have been a missed trade. Just because the breaker was so close to the order block, I decided to take it from the breaker and cover all of those areas. Now, notice where my stop loss was, just above this here. Obviously, I could have put my stop loss here. That's a 1-19 risk to reward trade. 1:19, and I can guarantee you, oh, that's a 19 pip stop loss rather. That's a 19 pip stop loss trade, and I can guarantee you the market is going to hit the take profit at 1:10. But you know, I decided to give a little bit of room for the stop loss. And guys, that was the trade. That was the trade. That was the trade, guys. Taking right from the breaker, you can see how the market is dropping marvelously. Marvelously. Already hit the first take profit around here. Okay. Very certain the market is going to invalidate this level. So you can see how the market is dropping, guys. All of this trend line liquidity just sitting right here. All of that trend line liquidity. Again, you can see the points where the market broke the trend line. And for trend line traders, you know, once your trend line is invalidated, okay, retest of your trend line, of course, you want to sell. You can see how market structure is now aligning with trend lines, guys. Okay, I can guarantee you this market is going to tank a lot more, guys. I can guarantee it's going to tank a lot more. So that's exactly how I was able to get that trade. Just looking at it from this perspective, tell me this doesn't look very, very beautiful, guys. Again, let me now show you how you can also add Fibonacci to your analysis. Now, I know this analysis is looking a lot messy, but guys, remember how we came up with all of this from nothing, all right? So adding Fibonacci to this, from this high, all the way to this low, right here, you can see that, again, this is reacting from the 0.62 level to the 0.79 level. Amazing trade, you know, playing out with multiple different schools of thought, multiple different indicators, multiple different ways of analyzing the market, both smart money, retail. You know, like, this is just beautiful to see. This is a perfect trade idea, and I really hope you guys are going to gain a lot of value from watching these videos. Once again, if you're new to the channel, please like and subscribe. Okay, so we can now go back and look at the before. Okay, this is the before when I dropped the trade. I want you guys to look at the date when I dropped this trade. Guys, this is October 1st, guys. Look at that. That's October 1st, okay? October 1st right here. That was the day I dropped the signal. That wasn't even the day I dropped the signal, guys. No, I'm wrong. I dropped the signal on I dropped the signal September 29th, guys. Look at it. September 29th at 10 a.m. in the morning, okay? September 29th. And let's see when the trade played out. This trade played out October 1st, guys. So I dropped the trade September 29th and the trade played out October 1st. So obviously it took some time before the trade played out. So guys, this is an amazing example of, you know, the application of market structure and now using indicators as your Confluence. I can bet you if you add RSI to this, it's going to show you where the RSI was oversold around this region here when the market was mitigating the breaker level. Again, guys, this is just a beautiful trade, and I really hope you guys gain a lot of value from this trade. Now, before I go, I just want to show you guys that the same thing happened on GBP USD. I'm not going to do all of the markup and everything, but guys, just look at this amazing trade. Again, if I gave a signal here, right, this particular trade from right here, I gave this trade as a signal on a video that I did within the community once again. So let's go back to the community. Guys, you should come to this group and, you know, just come to the channel and watch this video, guys. You're going to understand exactly what I mean when I talk about top-down analysis, when I talk about multi-time frame analysis, when I talk about patience and everything that has to do with trading. Guys, come and watch this particular video right here. The way I explain things in my videos, even somebody who's not well acquainted with market structure can understand. I open your eyes to market structure. I make you believe in the fact that if you trust the market is going to give you exactly what you want. So in this particular video, hopefully you guys are going to come into the community in great numbers and watch this particular video. I want you to see how I broke down GBP USD once again using the exact same things that I've talked about in this video to catch this exact trade. Guys, I kid you not, this is something that works again and is repeatable. Now look at the same thing going on GBP USD. Everything I've been explaining in the last hour or 30 minutes rather, happening right in this video, right? So we have daily, we have our daily order block right here. Okay, so you can see this is our daily order block. Coming into the 4-hour time frame, we have a 4-hour order block. Okay, we have a 4-hour order block based on 4-hour break of structure right here. So this is a 4-hour break of structure right here. I picked this candle right here as my order block. All right, so we have 4-hour order block within the daily order block. Okay, and then when we go to the 2-hour time frame, we have a 2-hour order block within the 4-hour order block that's within the daily order block, and that is that right here. I think this one came from the 1-hour time frame, guys, if I'm not mistaken. Yes, that one came from the 1-hour time frame right there. Guys, trust me, I'm not making this up, guys. This shit works. Okay, 1-hour time frame order block within the daily. That could be your key to sell this market all the way to the downside. We should be expecting this market to create a brand new low. That's a 1:9 trade. So quickly, I just wanted to show you guys this on GBP USD. Now, this trade that I was talking about, I gave a signal, is just a follow-up trade. Look at how, as the market was going up here, we had a change of character, we had a new trend formed, and guys, the same thing over and over again. Again, is repeatable and it works, guys. It works. So this is going to be the end of this video. Again, like this video and subscribe to the channel if you enjoyed this video. Please refer this video to your friends. I'm going to be doing a lot more of these videos, and I'll see you guys in the next one, man. Profit gang, man. You already know what it is, man. Gang. Let's get it.